Hey guys, what's up? Welcome to this channel. It's your boy Sammy. I was asked a question some time ago that I decided to create a video about when it comes to chart patterns, which is the best time frame to actually do analysis from. Now, to me, I would like to point out something. When it comes to chart patterns, there's something you need to understand. Not just chart patterns, everything that has to do with the trading industry. Whatever happens in the 4 hours equally happens in the 1 hour. And while whatever happens in the 1 hour equally happens in the 30 minutes. Whatever happens in the 30 minutes equally happens in the daily time frame. Now, the only difference between these things is that these time frames is that each of them has their specific hours of specific timing where they are being formed. Whatever happens in the hourly time frame takes 1 hour for each candle to be formed. That means you need to calculate a longer hour. Now, whatever happens in the 5 minutes takes 5 minutes for each candles to be formed. That means you need to be calculating a little bit minutes. Now, the reason why beginners traders lose money is because we run down to the lower time frame because that will not waste our time. But guess what? Most of the times we are wrong. We are wrong because actually the market starts from the something called top-down analysis, whereby we do our analysis from the higher time frame and go down to the lower time frame to trade off. So if you are that kind of a trader that you base your analysis based off of 5 minutes, 1 hour, you might be seeing profit, but it wouldn't last. What do I mean by that? You might make profit today, tomorrow you lose back the money because why? You are doing your analysis based off of the what? The lower time frame, and you don't know what the market is actually doing. So in this video, I'm going to be showing you each time frames and how they relate to what your trading career. But first of all, there is something we need to be aware of. When we are talking about chart patterns, we have two types of chart patterns. I dropped that in the previous video. We have chart patterns that move with the trend. Let's say the market is bearish. This market is actually bearish, as you can see the trend line, and has been respecting trend lines. So as you can see, the market is bearish. So what do? We are looking for chart patterns that go with was this bearish market. Example of these chart patterns are this. I call this a rising channel because it's actually moving with the trend. Okay. Okay. Okay, now this one is actually moving with the trend. As you can see, we saw a breakout here, and the market came back to the what, to the downside. Now all this was a retracement move to take price back to the what, to the downside. This whole move here that you were seeing was just to come back to this trend line to respect it. As you can see, price has been respecting these trend lines. So sorry, let me take this one out. So all what the market did was just to retrace in between and come back to the trend line for a position to be taken to right price back to the downside. Now someone might be here and may be like, I think it's time for me to look for an opportunity to buy. It is actually wrong because why? You cannot be buying here when the market flow is actually bearish. Okay, I will tell you guys a secret in this video about trend line, but it has to be at the ending of this video because I wasn't supposed to talk about trend lines. I'm supposed to talk about chart patterns. Now let's dive into chart patterns to understand what I wanted to say. Now we have two types of chart patterns. The one that move with the trend is called continuation chart patterns. Now this is a continuation chart pattern because it's actually telling us that we are bearish, but we are just actually having a retracement move back to the trend line. I'll always say this: as beginners, please look for a way where you can see a trend line in the market for you to see an opportunity to either sell or buy. Like you can see, no, now we know the market is bearish, right? So someone might be like, the market broke out of the trend line. Hey, let me tell you a secret that I found out in forest during the course of my back testing and all of that. Whenever a market break a trend line, please know the market will not start flying up. There is something the market will do. It will come back to the trend line that it broke to respect it. Now let's draw this trend line to the future. I'm talking about chart patterns, okay? Stick with me. I just want to make something clear here. We're going to be drawing this chart pattern in the future. So when this market comes to this chart pattern, it's going to retrace back up. Let's be aware of that one. But please, it doesn't mean that when the market break out immediately, you're going to be looking for buys. you might not be right, you'll be wrong, because why? You have not seen the big picture. If you go down to the daily time frame from this chart here, let's go there, you will find out that this market is actually what? It's actually bearish. Let's go to the weekly. I think I'll stop at weekly, then I'll come back to the 4 hours to explain what I want to talk about. Don't forget, our topic is understanding the particular time frame that you're supposed to trade off of whenever you see a chart pattern. So as you can see, this market is bearish, right? I think this is all I'll be doing here. The market is bearish. It's bearish. You shouldn't be looking for buys. It's bearish. So we should stay on what? Sells. Sells. Now let me open your eyes a little bit. Now somebody might be arguing, how is this market bearish? Let me show you. See this trend line that I drew here? So the market was respecting here, and all of a sudden we got a break. Remember what I was telling you? It came back down to touch this trend line, then it retraced back up. So this retracement back up is to just come to this other block here. Now we are going back down. I don't know if you get the picture now. So this is to tell you now that this market is bearish. So going to look for buys in the sales market, you're going to be wrong. That's why I said whenever you see a chart pattern in the lower time frame, please look for continuation chart patterns, because why? The big picture, which is the weekly time frame here, is telling you that we are bearish. So stay with the market and stay with the market flow. Let's go back to the 4 hours. Now I'll tell you what I like to do. When it comes to chart pattern, there's something I like to do. I like to see the big picture. Don't forget, we've seen it from the weekly that we are bearish. Now that's cool. Now we're seeing in the monthly in the 4 hours that we are bearish. There's something I like to see to get the confirmation. Whenever I see a continuation chart pattern in this bearish market, I look for opportunity to sell. But whenever I see a reversal trend, a reversal chart patterns which shows that the market is turning from bearish to bullish, I would not be trading it. Why am I not trading? I'm not trading because I know it's a trick. It's either a retracement move to look for a way to grab out liquidity, or it is actually there to, I don't know, maybe news impact or kind of. But I like to stay with the market flow because the market flow gives me what? A higher advantage of wins. Now let me quickly say this. When you see people win in the market, like professional traders, that will tell you one thing that they do that make them win. They have mastered what is working for them, that is making them win. That was what I didn't understand at the long run. It was after a while that I got to understand that this thing is about repeating that thing that is working for you, that keeps you profitable in the market. It's not really about you doing one thing, another thing. Today you do one thing, tomorrow you do another thing. No, it doesn't work like that. Okay, if you want to stay profitable, you have to stick to that one thing that is working for you. And one of the things that's working for me in the market is trend following, trend trading, guys. And that's what I can teach you. I can't tell you what I don't know. So it's what that is working for me that I'm going to be showing you. Now let's talk about chart patterns. Now as you can see, we had a double top here, right? A double top here, I'm cool with it. Come on now. I'm cool with it to sell. Why am I selling? Because I know from the higher time frame, the market is bearish. Now I've drawn this line. I will show you this double top here. Please stick with me. I'm talking about how the best time frame to align or chart pattern. As you can look closely, we are on the 4 hours. I did not go to the lower time frame. Please let this stick into your head. Lower time frame is for entries. Higher time frame is for analysis. I will say it again. Lower time frame is for entries. Higher time frame is for analysis. If you want to do analysis, come to the higher time frame. You're welcome. If you want to look for an entry, go to the lower time frame. Now, how would somebody be saying? Now, some of you might be confused and be like, "What do you mean by this, Sammy? I'm confused." I will tell you. What I mean by that is, come here and do your old stuff. Come here and do your whole analysis. Draw your trend line in the higher time frame. I advise 4 hours. If you're a day trader, I advise 4 hours. Okay. Now immediately you come to the higher time frame. Now let's take this as an example. This happened here. Okay. This market has come to touch this trend line. I'm going to be taking you down to the lower time frame to show you what happened. Okay. Just stick with me. But now let's talk about this. I'll take you down there. Don't worry. I'll take you. Let's talk about chart pattern so I don't deviate from the topic. I just get excited whenever I hear about what's it called again, trend line trading strategy, because that's what I've been trading for a while now. Okay, let's draw this. Let's draw this. Now somebody may be like, this market is bearish. This market is bearish. Yeah, it is. It's bearish. Is it? Please don't get confused though. It is actually simple. Okay. And this. Please, if you want to identify chart pattern, it's not hard. Just look for something that you don't understand what is happening in the market. I'm going to be showing you now. Okay, this is what I will do. Let me zoom it closely so that we understand what I'm doing here. Okay, this is how you draw chart patterns. Let me take this out. Let me remove this trend line. Yeah. Now, if you look closely, we will start from the last lower high. Yeah. To the very last one. If the market touches, if the market touches 2 points, it actually means that that zone is valid. Now, what that means is the more the market touches the candles, the more valid it is. If it touches this 2, 3, 4 times, it is good. That means it is valid. The market will respect it in the future. Now, the second one is the lower high. How many times? 1, 2, 3. But where did we start? We started from the last lower high. Lower low, sorry. The last lower low, that's where you start. You start from the last lower high. In the up one, the lower one, you start from the last lower low. That is how you start drawing it. Now let's look for our trend line and see how we can draw it. Let's see how we can draw it here. I'm trying to make this video as detailed as possible so we can get a clearer understanding. Okay. Okay, I think I'll prefer this. Okay, that's better. So I point it in the last. You can use either the wick or you can use the body of the candle, whichever one that is better off for you. Okay, so we have that, right? Good. Please always take note of this, that this market will always come and respect this last one. Don't forget, I was telling you something like this: the first, the second, and this third one here, it looks small. Sometimes the market respects it, so I'm going to be drawing it there to show you a reason why the market respected it all. So now what can we see here? Come on now, give me what I want. Okay, let me just leave it like that. Now what can we see here? This is a continuation chart pattern, right? It's a continuation chart pattern. Let's leave it like that. Continuation chart pattern, an ascending chart pattern. Why did I call it an ascending chart pattern? I will show you why. This here is actually a double top. Double top that the market respected. The market broke below it, pull back. Now you may be wondering where this trend line is coming from. I'll tell you, and I'm going to be showing you. But before that, let's zoom this out. This is it. Don't forget what I told you. This is the big trend line. The big trend line. The market broke below it, right? Come on now. Okay. The market break below this trend line. It broke up. Now, don't forget, I told you the market is going to be coming back to this trend line to respect it. But whereas, why the market is going up, it's not going to be just flying up like that. It's going to be moving with the trend line. And it's going to be respecting that trend line in the future. Can we see it? So what happened? You got to break down here. Break out of trend line. Now, why the trend line was going on, don't forget there were some funny moves here. So what we do is this: we draw this trend line according to the way the market is moving. Somebody may be like, why didn't you draw it this way? Yeah, I would have done that, but let me tell you something I consider in the market. I look at major swing points. This is major. This is major. These tiny ones here, they are not my business. This one is major. These ones are tiny. So I go after the major what swing points. So when I drew the market out, the market actually came back to what to touch this trend line here. So this is another entry for someone that missed this first move. Okay. Now this is actually a breakout. How did I know? Good. And I think this video explains what breakout is. I talked about it in the last video. So if you haven't watched the video I talked about chart patterns, another entry, this is another entry for you. Now how did I know? This market was the one that broke structure, right? So what did we see here? This was it. Good. A breakout. Now what is a breakout? A breakout is an entry whereby you look for opportunity to enter. Immediately the market breaks out of a zone. It broke out of the zone and went back. Okay, we are going back to the downside. Now what this market was doing, don't forget what I told you in the last video. I said something. I said if a market, you missed the first move, the reason for a chart pattern is to make sure that traders that missed the entry can actually look for another opportunity to enter the market. And the second one is to trick out what buyers. So thinking this market is bearish, they enter the market. They do these chart patterns to make sure they trick out buyers to come and buy here, and they eventually will stop them out after the breakout. Now let's talk about the chart pattern. How to identify which time frame is the best. For me, I say stick with what 4 hours. All the time frames has their own chart patterns. This happens in the 4 hours, this happens in 1 hour, it happens in weekly, it happens in monthly, it happens in daily, it happens in 5 minutes. But what I would say to be safe is this. When you're in the 4 hours, this is it. This is the chart pattern, right? Now let's go back to let's look for 15 minutes and see how it looks like. Let's go to 15 minutes. I think that's the lowest I can go now because of let's look for 15 minutes to see how this is working. This chart pattern is actually working in what, in 15-minute what time zone. It goes down to our chart patterns. Don't forget what I said. It takes 15 minutes for each of these candles to be formed. So you don't expect it to be as free as and small or as quick as that of under 4 hours, because it takes longer time. One of the key elements, guys, you have to learn to be patient in the market. If you are patient, you will be profitable. One of the reasons I use in encouraging myself is to tell myself that no market can give you, no business actually can give you the profit that Forex does. Because why? You are actually making let's say 5-6 times of your profit in a day. Well, that's cool. Some investment give their clients, or let's say their business partners, 11% in a year. So imagine 5% of your profit in a day times a year. That's awesome. That's why I decided to stick with this business, guys. Okay, almost there. See, this can be tricky, right? Staying down to the lower time frame to come and do analysis, you just get stopped out, and at the end of the day you get confused. Now you'll be thinking that your strategy is not working. Okay, this is 30 minutes. I couldn't get that on 15 minutes. I don't know why, because of the candles and much. But this is it. Let me zoom out a little bit closer. So this is the market. We got this continuation chart pattern here as a rising channel, telling us that the market is actually what still in its what rightful move. So what we got was this. We got a breakout here. We got a breakout. Okay. We got a breakout here from this zone here. So this is where we should be looking for potential entries to put our stop loss here, or somebody put it whatever way, whatever risk we need to take to right price all the way to the what, to the downside. But this is the only thing I can tell you about this stuff, is that when you do your analysis from the 4 hours, you are of a better chances of making good profit. Because why? When you come down to the lower time frame, like the 30 minutes, all you have to do is to confirm what the market is doing in the higher time frame, the 4 hours. Okay. But if there's some of the times that you have to understand something, there's some of the times that when the market is actually doing a continuation chart pattern in the lower time frame, but the 4 hours is not doing it, it shows you that the market is still bearish. Okay, no doubt, we are still bearish. But if the market is actually doing its chart pattern in the 4 hours, it shows that that move is going to be longer. From the 4 hours, it's going to be longer, because why? 4 hours candles take longer to be what, to be formed. Okay, but one is doing the lower it's doing the chart pattern in the lower time frame. It doesn't really necessarily mean that that market is going to be continuing really strong in that what trend move. Okay, I think that's all for this video. If you haven't subscribed to us, do well. I'm going to be leaving the link of the previous video in the description or in the comment section below. You can just click on it, subscribe and like also. Thank you.